We're going to take a look at the tops and the bottom tweezers. So basically a tweezer pattern consists of two candlesticks. So the tweezer bottom right here, as you can see, and then we have the tweezer top. So with the bottom one, we have this candle is actually a bearish candle. So this is a bearish candle, is going down, and then the new candle is a bullish candle. So this forms at the bottom of a trend or at the bottom market, showing us that the market is potentially going to start going up because now the bullish are in control. But then oppositely to this, we have the bullish candle first in the tweezer top. So this is at the top of the market. Remember, the trend is going up right here. That's why we have the first candle as bullish. So the buyers are still in control of this market, but then right away this candlestick forms. That means now the sellers are now taking over the buyers, and they are taking over the market. So the tweezer top formation is considered as a bearish reversal at the top of an uptrend, and then the tweezer bottom is a reversal at the bottom of a downtrend. So we're looking for buying opportunities with the tweezer bottom, and the tweezer top we're looking for selling opportunities. Buying opportunities, selling opportunities. So the tweezer tops occurs during an uptrend when buyers push the price higher. This gives us the impression that the market is still going up, but the sellers surprise the buyers by pushing the market lower and closed down below the open of the bullish candle. So this pattern indicates a bullish trend reversal, and we can trade it if we combine it with other technical tools. The tweezer bottom happened during the downtrend when sellers push the market lower, but the next session price closes above, roughly at the same price of the first bearish candle, which indicates that buyers are coming to reverse the market in direction. So as you can see right here, we have a quick example right here where the market was falling down. So the market was falling down right here on a downtrend, and then this pattern formed right here at the bottom. Remember, when it forms at the bottom and it's the first candle is bearish and then the following candle is bullish, that means now we're looking for a reversal of the end of a downtrend. So we're looking for buying opportunities in this market, and as you can see, that's exactly what happened in this example right here. So again, this patterns, the bigger the time frame, the bigger the better the stronger the signal. So on a 1 hour chart is more powerful than with the one that you will find on a 15-minute chart. So it just depends on the time frame that you're using. But again, you don't trade this on its own. You don't trade this. You don't take this as a confirmation of a trade on its own. You have to use it with other technical trading tools that we're gonna be going through. So the chart above shows us a tweezer bottom that occurred in a downtrend, and then the bears pushed the market down. However, the second session opened when the prices closed above the first session of this candle. So that means indicating that the reversal buying signal that you can trade if you have other tools that confirms your buying decision, right? So try to understand the psychology behind the candlesticks formation, because if you understand why it was formed, you will understand what's happening in the market, and then you can easily predict the future movement of the price. So it's all about understanding why this candlestick is actually forming. So again, the psychology behind this is that the sellers were pushing the price down, but then the buyers just came into action, and then they pushed the price to close above the opening of this market when it was still falling, or at least above this opening price of this candlestick right here. So that's basically the psychology behind this. Okay, so now we're gonna take a look at what we call the extra patterns the extra candlestick patterns that you might need to know. So let's jump into that right now.